Good afternoon, everybody. This is Dan Hussey with AlgoDayTrader.com, bringing you our week-ending trading recap, as well as our Friday New York session recap. It's Friday, September 27th, just after 3 p.m., 4 p.m. Eastern. The New York session is just closed, and we're about 1 hour away from the Forex close. Let's begin with the S&P 500. Today we left an open gap at the 92 figure. We've witnessed and seen a series of extension shorts drawn from the 1713 quarter lows on last Thursday to lows of Sunday, Monday. Traded first extension to targets. Same anchor, new low. Traded again at the 1700 quarter and hit downside targets today. Continuing with this pattern, we're going to go same anchor, new low for the extensions now. I also want to draw up the full extension, a traditional drop from the 17 quarters to lows. The reason I'm drawing this up is because we could trade into this level, fill today's gap, and then continue to the downside into what is ultimately, larger, full traditional halfway back long support at the 1675s that we've been looking for us to trade down and into. These 1675s are a full halfway back long. They're inside of and would take us up and into the 1740 targets, which are both our daily extension longs that traded out of this summer, as well as the summertime low to high that traded a full halfway back at the 1628s. Both have upside targets of the 1740s. Below 1660, we're going to be looking for a retest of the 1628s, and ultimately, and very potentially, a retest of the 1550 support levels. So, we're not bearish in the long term on the market. We're still quite bullish. On the U.S. indice market, that is. The short term, however, we are witnessing and seeing shorts get participation and trading down from highs. So, we can't be a buyer and we can't fight that without a break in that trend, which we have not seen yet. We will go into Monday next week with a gap level at the 1684.75s. We also have, again, the open gap from 1692s that was left today. So look for resistance up into the 92 to 94 range. That could potentially take you down into the 84 gap fill on Monday. The British pound behaving extremely technically. Again, we are looking for a 62.70 upside target for the pound. We have traded in a series of longs here. The next in the series traded at the 160.60 area. We have upside targets. There we go, of the 6160s, and inside this level we have held a very nice and clean series of longs off of these lows. They've traded once to target, twice to target, 3 times to target, and now the next in the series long is drawn from, these are just micros, drawn from the 6120s, 6121 anchor to this high here. So if we were to guess on gaps for next week, probably, and very likely, or not probably, or very likely, excuse me, there's the potential for a gap actually up and into targets from this larger 15-minute long into the 6160s. If we trade there, then we're going to be looking for, of course, the next in the series. We break out of those targets, we'll be looking for longs drawn from the 6130 anchor to highs. But we need to see us trade up to the above 162 for us to consider extensions. Otherwise, the most probable gap going into this weekend, if we close right here on the pound, is going to be at a gap to the 6160s, only about 15 pips higher. If we do gap down, support could be found at a full halfway back long at the 6105s. Otherwise, probably very likely no gap and just continuation of this trend into next week. The Euro US dollar. Inside the extension long drawn from the 131.80s, I'm sorry, the 33.80s to 35.70 highs here, we have broken the full short. After breaking this full short and running up into highs, today we pulled into a full halfway back long. Now, I'm not saying we'll have a 70 pip gap up, but the most probable place for a gap to occur in the euro into next week is to the 135.90 or the 136.20 area. Another gap potential up situation. We'll see what happens. More than likely, because we're closing right at this entry, we will probably open right at this entry and hopefully just continue higher into those targets. I'm going to be canceling our orders for the extension we are looking for, drawn from the 33.25s to highs. It's at a 34. Those are the 34.50 buys. I would still be interested in taking that position if we do trade down to that level, but I'm going to cancel orders for now, and we would probably re-enter those orders if we do see us come off highs and continue down and get below the 134.80 support level. But for right now, I'm going to cancel the orders. I don't want to leave any orders out there over the weekend if we're not in something. But like I said, we've traded a full halfway back off of our 34.60 lows to the high here. So trend continuation would take us up into the 36.20 area on our next push up, and really fill a number of targets we have, including this much larger 4-hour full pullback that we had, drawn from the 27.45 swing to summer highs here. We pulled back in early September right into the 31 lows, and it was right at the beginning of the month. We had within the first week of the month we had a low for September put in, and the euro has just rallied since then. The Aussie US dollar, Jason pointed out, there is this original extension, the 90.73s that traded once, twice, and now if you take it same anchor new high, we have traded to the tick into that level today. I am more inclined to wait and look for the full halfway back on the Aussie US dollar, and there's two reasons. One, when you take a look at the Aussie Yen, you see that it now has broken all of its extensions and is coming lower, and it's going to be very hard for the Aussie US dollar to rally without the Aussie Yen. It's just how it is. The Aussie Yen is the bigger beast, and it is a very much stronger player in terms of Aussie strength and weakness for this currency, because one of Australia's biggest trading partners outside the U.S. is China and Japan. Hence, the Asian currencies tend to weigh on the Aussie dollar more. Anyway, regardless of this extension, we have a series of shorts that has been in play off of the highs, and we can take a look at those now. These shorts have traded once, twice, and now have a third entry point at the 93.50s. So I would personally, I would be a buyer on the Aussie US dollar if we can break the 93.66 area, and I would then look to buy the pullback that ensues after that. Of course, assuming we don't trade straight up into this 94.14 full short off of highs. But for me, this extension wasn't a first take on first touch. I'm just a little, we've seen it get a bounce, but not much of a reaction off of this level. It could barely get 20 pips off this level today. Granted, it's a Friday. We'll see what happens with the Aussie going into next week. So, but the good thing is we have a game plan. We have a series of shorts that if they break, we can take the ambush setup. And of course, if we do continue to break down, we know we have a major long area down at around 92s. In fact, it's the 9190s that is the full long. I probably wouldn't take it on first touch in the Aussie US dollar, but I am looking to take this similar level. And let's hop on over to the Aussie Yen and talk about that. I am looking to take that a very similar level, this 90.44s, on a first touch in the Aussie Yen. The Aussie Yen had a series of extension shorts that played out all summer, once, twice, and failed out the third time. There's now a valid ambush long at the 90.44s, and this is the type of setup that it may be the last opportunity to get into a swing in the Aussie Yen before we trade up higher. The only thing I'm cautious about is if the Aussie Yen wants to come down and do a second test of the 88.70s, which is its major daily level. Which it very well could, and actually, statistically speaking, is very probable for the Aussie Yen. But nevertheless, today we were able to witness a series of shorts that have traded entry to targets 3 times and then broke down into extensions, and they traded the basically a 92 anchor to lows that have traded once and now twice, and we have flagged all afternoon inside of this level. So seeing that there is additional downside potential for the Aussie Yen in the near term, that is very much going to weigh on the Aussie US dollar, and I'm always hesitant unless I can see some confluence between a yen cross for a particular currency and the US dollar cross for the same currency. I'm always a little hesitant to just fire off trades at particular levels. There is a valid full 50% short on the Aussie Yen as well. This 50% short is at the 92.93s. It's drawn from the 94.46 highs to lows here. And let's take a look at why that we're looking at that short. And the prior longs are probably, we can take it down to an hourly chart, and you can see them just fine on an hourly. But the prior swing from lows to highs here began with an 89.94 anchor to highs on Thursday the 4th. We traded a 50% long, and we ended up gapping up the following Sunday 2 targets. Same anchor, new highs, traded a second time, and it was one of the cleanest trades we've seen all year. It came down for a second test, but they could not break below the 91.70 support level. And then we rallied from there up and into the 94.40 targets. Same anchor, new high for a third time now has failed. We broke 61.8 lines today, and overnight we broke 65% lines, so we're totally broken, and that's why we're drawing up an ambush short at the 92.90s. And in the event that short trades, its downside target is the 90.50 area, which is where we're looking to buy anyway. So keeping an eye on this trade, may take a shot at a 92.90 short if we trade up in there, but I would much prefer to see this market just continue its micros, continue its smaller time frame shorts down into the 90.40s, because that would always give you a much tighter trade setup that you want to break for a reversal down in the 90.44s. But this is a major, like I said, this is a major ambush long that is in the direction of a much, much larger daily setup. And that daily is the next in the series long, drawn from the 72s to highs. So we've been talking about this long for pretty much the entire year. Ever since we found a top in we found a top in early April. Sometime right around the 1st of May, we started talking about this. Once we broke, full extensions that we were tracking then, no short was given. We did hold a short off the highs, went to next in the series, and then extensions. Very clean, crystal clear extensions that broke, and now we're looking for that ambush reversal, and hopefully this market gets it. It's only 100 pips lower. The upside on this, on this full pullback is immediately we'd be looking to trade into the full halfway back short, which is purple on this chart because it's not a trade I would take against a major daily long, but we'd be looking for an almost 600 pip target for about 100 pips risk, which is really great risk reward ratio. And then, I mean, ultimately, this could become the entry for a swing towards the 113 figure. So it's this type of trade that can pay dividends in the long run. But execution of it and getting in and being patient with it is always going to be key, because remember, this is a very big level. You can see how how much we dipped in to this major daily long. I mean, we dipped in 220 pips, 230 pips on two occasions. Obviously, the price objective is much higher, but you have to kind of, I mean, not many people can absorb a 220 pip run, and that's what this was. This was shaking out of weak accounts that initially bought this level, and I mean, right off the bat, you can see if you had taken this level, it traded right up into your first target. You had to front run it by 20 or 30 pips here, but still, it's such a major level. First targets have been hit, both not only the first time, but second time as well on this rally. So it's kind of the game plan going forward. It's one we've had for a long time now, and we've been patiently waiting and watching this market play out. And this is going to be our opportunity to strike. So looking forward to taking and getting in on that trade. The Euro Aussie continues to flag off highs here. We have an extension long drawn from the 144.60 anchor to highs. There was a traditional long that traded, went to and through targets, and now we're looking at extensions. Stepping out to a 4-hour time frame, you can see both the daily and the 4-hour extension longs here. The 4-hour extension long has actually traded, and so long as we trade into a full halfway back long at the 43.80s, or continue these extensions higher before we break this full short, I'm going to be interested in getting into a Euro Aussie swing trade as well towards a 154 price objective. It hasn't given us that full halfway back long yet. We are witnessing, extensions, and we see a reverse engineered series here that can continue until it fails. But upon failure, we're going to be looking for a 43.80 support level now in an ambush long. Again, very similar to that very large setup in the Aussie US or the Aussie Yen. The 154 price objective with what is a full pullback here could occur down into the 43.80 area is exactly the type of trade that I look for in terms of getting into swing trades. We can potentially get into a swing trade for several, 1,000 pips and risking 50 to 60. That's the type of risk-reward ratio I like, and I'm not. And while the probability of that trade actually going to the target is much lower than the probability of it only making it to the 146.50 targets, it's the type of trade that builds accounts. It's the type of trade that builds equity, and you have to, of course, take appropriate size, and you can only risk what your account allows, but these are the types of trades I look for every year. There's only maybe a handful of opportunities every year, but you have to be ready and you have to be willing to take them if you're going to be a swing trader. I mean, otherwise, these are great scalping opportunities. You know the levels, the probabilities for it getting to first targets and to get to its this individual 4-hour pullbacks, or I'm sorry, 15-minute pullbacks, price target of 46s, and if you're happy with that type of trade, that's the trade for you. I try to be a little more dynamic. Obviously we get off at first targets. I try to take a piece off at the actual price objective for any one of these trades, and then I like to leave a piece on and let it work as a core position towards a larger price objective. So I try to be the best of both worlds. The dollar yen, fascinating. It actually broke a micro series of shorts here off of highs today. We had you can see that series just in today's candle. Kind of traded once, twice, 3 times, and this fourth time failed, and is now given a micro ambush long. Not exactly the type of trade I would take into the weekend, but it is there. We also traded into Excuse me. We've also traded down and into this larger full longs. Original support at the 98.20s. And we do have shorts have a downside target here of the 98 figure. And that's a short drawn from the 99.70 to lows here that defended a 61.8 line. So very well could trade down and into that level, fill the shorts target, and then reverse. We could continue lower and break. And like I've been saying for some time now, we see this series of lower highs and higher lows of the market just condensing on itself. And right now we are really we're now inside of a 100 pip range on the dollar yen. But if you want to break it down, we're inside of truly a 200 pip range that there's not much to do. If you want to play the range, this is the low end of it, and we came off of the high end of the range already, so not much to do. I think it's starting to look like the dollar yen is still kind of wedging and finding its way through a larger triangle pattern if you're an Elliott waver, and you can pretty clearly see some trend lines here. We did break prior trend lines and held them as support, which is good for the long side, but clearly this market isn't ready or hasn't been ready to break out yet. So judging on what we see in and we'll look at the euro yen and the Aussie yen and see why there might be continued yen strength or weakness in the dollar yen, euro yen, and Aussie yen coming into the market. And I think one of the best examples of this is the euro yen right now. We traded into full targets of a full 4-hour pullback, and now the next in the series is below us, and we're holding a short off the highs. So there could be some more downside or sideways price action in the dollar yen. So in terms of what I'm looking for in the dollar yen, I think that the US dollar itself might get a little stronger here into the near term. Maybe not against the euro, but certainly against other crosses, like the Aussie, which in the dollar yen, would be a upwards force. But you're going to see probably fairly equal yen strength that is coming in from the euro yen and the Aussie yen weakness. Thus, the dollar yen's probably going to go sideways to down, be more choppy, while the euro yen finds its way down into the 130-150 support, as it's already traded a short off the high in the direction of that support level, and it's next in the series 4-hour long, and then of course the Aussie yen, which we already talked about, where we've already broken longs, and we're trading potentially down into a massive long level. You're going to see the euro yen and the Aussie yen come lower, and the dollar yen very much probably go sideways, as these moves are going to probably be more reflected in the euro dollar and the Aussie dollar. So I hope that makes sense to people, but it's a push and pull relationship between all of them. Who knows if that works out or not, but all we really care about is the fact that we have trends, we have levels holding, levels failing, and the market's ultimately remaining pretty technical here. Finally, gold. We'll go over the 10-year actually after this. Gold has just rallied back up into its 1340 resistance and found resistance at the full halfway back short inside this range. We found support at the long, and then stepping out to the 4-hour chart, we have much larger long and long levels at the 1305s and the big short here at the 1362s. So it is also condensing, and we're seeing both sides get participation, both sides get free, both sides get what they want, and that's driving price into a more narrow range as we sit inside of $100 on gold, and now are really inside of what looks like a $30 range on gold between 1320s and 1350s roughly. Okay, the question is do we head higher into 1550? Full pullback, which is just from all-time highs to lows here. 1550 would be the full halfway back short, or do we pull into, and this is going to look funny here, the all-time halfway back long drawn from 0 to all-time highs, which resides below us here at the 960 level. So I see a very strong case for either. I mean, we don't have a smaller time frame trend right now. We have both sides fighting, and one side's going to take over. We're either going to head up to 1550s, we could break and then go all the way through and just break shorts and go higher, or we could trade up into what is technically a valid 1550 ambush short because we broke our daily extension longs. We're looking for that ambush short that could take us down and into the full halfway back long, or the all-time long in gold, which is down 960 to 1,000 area. That's what markets do when they break their big daily, weekly extension longs, like the S&P did, like the Dow did. They pull into that full halfway back, that all the way halfway back long, drawn for all time, lows to highs. We've gone over charts in the S&P. I'm not going to go over them now because we've gone over them a lot in the last couple of weeks. How in the 70s the S&P did that, and how in the 2000s the S&P did that. Both times held their all the way halfway back longs, and there should be no surprise as to why we're at new all-time highs in the S&P, as it has been a complete replay of the 1970s recession and the subsequent recovery. Gold, it is bound by the same laws that all these markets are in terms of technicals. It's behaving the same way. We broke major shorts or broke major longs. Now it's a game of where is that big support level, if it's there. If it's not there, then we have a completely different story to talk about in gold. But the truth is for all of history, gold has appreciated in price. The S&P, the Dow, the DAX, the FTSE, all these big indices have been the same way. Their entire existence, albeit smaller in time frame than gold, have done the same thing. In other words, you can be a perma bull, believe in the ability of mankind to create infinite inflation, and that's what you kind of have to step back and look at this from a bigger picture. 3 generations ago, it cost you, how much did a cheeseburger at McDonald's cost you? What does it cost now? That's no different than looking at the price of gold or the price in S&P over the same time periods. You're going to see the same inflationary pressures. You're going to see the same, from a monetary policy standpoint, the same things happening. You're just swinging a decimal place over for roughly, it seems like, every generation or so. All right, and finally the 10-year. 10-year has been holding this really big extension short, probably best viewable at a daily level. It's drawn from the 129 spot 30 anchor to lows. It's the second time this extension's traded. We're also in a major long from the 1 spot 24 or 124 spot 0 figure. Inside this level, inside here, we've actually had a nice series of longs. Once, twice, 3 times, that have now hit their upside targets. So again, we're going to be looking for next in the series long here to break. And if it breaks, in the 10-year, this could be, below a 125 spot 16. That could be the fuel that the dollar yen needs to rally, because the downside in the ZN is going to be upside in the dollar yen. They're extremely highly correlated, and I'll add a quick study here. I'll compare it with the 6J, the yen futures, which is perfect to compare the ZN with because the dollar yen 10-year relationship is inverted. Well, the dollar yen and the 6J are inverted, but they're the same instruments, just the futures of it. And you can see the high tight correlation that these two have. So, downside for the 10-year here, at least pulling back into this 125 area, is very much going to probably mean upside for the dollar yen in the near term. And then a break of this, and if the 10-year really starts to collapse from this short, you can just imagine what the dollar yen's going to do. I mean, obviously there's divergences at times, but for the most part, these two are almost mandated to move together because that's the nature of the carry trade with the dollar yen, which is ultimately funded through the 10-year. I mean, it's kind of the only fundamental rule in currency trading there is. It's not that the 10-year and the dollar yen have to move the same, but carry trades, they prevail. They are ultimately, yes, there are forces that act against them, and there are times where the carry trades will reverse for time periods for no reason, but ultimately you cannot fight. It's like water. You cannot force water to not, you can't force water uphill, unless you're pumping it. And that's, you can make some really great analogies here with what countries do with quantitative easing and that, but point being is, like, you pour water off the top of a hill, it's only got one place to go, and it's downhill. And that's what carry trades are. They're the flow of money between, nations with low interest rates to nations with high interest rates, and the 10-year slash dollar yen relationship and correlation is kind of proof of that in the currency market. And it's one reason why it's, if you're a yen trader or a 10-year trader, and you have to be paying attention to both, because there will be early signs in either or both, and certainly confirmation signs, of big moves. But right now, if the 10-year continues with its upside climb, continues and breaks the 127 figure, the dollar yen, it's going to be hard to find support. It really is. So, all right, everybody. That's all we've got for you this week. I hope those that have been with us, enjoyed session today. It was pretty quiet. It was a pretty quiet trading day, but really looking forward to what looks like the start of some good volatility going into the fall. Over the next couple months, we traditionally find, particularly in like the S&P, there's usually some kind of November top or bottom that forms, or late October. So expecting some good trading and some good price movement over the next few months here. So have a great weekend, everybody, and we will be with you as price action develops.